All right, that's right, 3 videos today. Hope you enjoyed the other ones, and I hope if you didn't watch them, you're going to watch them now. But we see Salesforce.com. Salesforce reported some earnings yesterday. I want to take a look at it because this stock's obviously down today in a time in which the market is rebounding today, thankfully, after a nightmare couple days. But what's going on with Salesforce and what does this company have to offer? Well, I think I'm a huge fan of this company and what they have to offer personally, but let's take a look at these earnings and see what's going on. Salesforce beats on an EPS standpoint by 10 cents, but report a GAAP EPS, oh my gosh, of negative 28 cents, misses by 25 cents. I hate that. I just got to be honest. And again, I mentioned the difference between non-GAAP and GAAP EPS is pretty significant. As you see, they fudge some numbers in the non-GAAP EPS, and it makes it look profitable, but really the GAAP EPS company technically isn't profiting. Definitely is a concerning miss there for sure, but you do see a revenue increase of 35% year over year, so that's nearly $5 billion. Cracking open a cold one with the boys. It's a good beverage. You do 3 videos in a row, the throat gets a little craggly. So you gotta just take a nice little drink of this beverage. Non-sponsored beverage, but maybe it could be one day. So this is one that shocks me. Okay, Salesforce reports Q3 beats and raised fiscal year revenue outlook, which outweighed by a CEO change. And now you think CEO change? Wow, that's major news. But then I think, am I watching an episode of The Office? Co-CEO Keith Block has stepped down, but will remain as an advisor to the CEO. I feel like I'm watching Dwight Schrute, who is the assistant to the regional manager, instead of the assistant regional manager. That's what it feels like to me right now. Why the heck do you need a co-CEO? That just seems like an extraordinary waste of money. Absolutely, because I guarantee his salary is way higher than when he's just this assistant or advisor. Wow. You're an advisor to the CEO also? That's just a concerning waste of money for this company. Now I know why they're not making profit. Sorry, I didn't mean to blast him like that. But that's just funny to me. That's extremely funny. The assistant to the regional manager, Keith Block over here. Quarter 4 operating cash flow was up 23% year over year to $1.63 billion, so they did get some cash-ish. Subscription and support revenue grew 35%, and professional service sales were up 21%. Remaining performance obligations was $30.8 billion at the end of the quarter, of 20% acquisition. So you see Salesforce will acquire the company Velocity for $1.33 billion in cash. Obviously, that's a good bit of cash for them, especially if their operating cash flow was $1.6 billion. That's all the cash that they made, but that's okay. Quarter 1 outlook sees revenue of $4.875 billion to $4.88 billion versus a consensus of $4.83 billion. So very good guidance actually in that perspective, and an EPS consensus non-GAAP of 70 to 71 cents. So good guidance as well on that. That's a very narrow range though. They never really give a range of EPS that narrow. So that's pretty interesting. We'll see how that goes. Same thing with revenue too. It's very narrow. But I'd like to see if, maybe this company's really locked down, and obviously they're very intelligent people working at this company, so maybe they have the ability to accurately predict this. We'll see. The upside fiscal year 21 view has raised revenue of 21 to 21.1 billion versus a consensus of 20.93 billion. So very good, obviously. Overall, better than the consensus. I like it. But again, very narrow. It's crazy. I don't know what this company's doing. They're doing some funky stuff. And an EPS perspective, they're expected better than consensus as well. So really, this hit on quite a bit of just good things. There's a lot of good stuff going on right now. So honestly, this company this is a good earnings, but they're down, and I don't think it's because of this Dwight Schrute being changed out of position. I do think it will be investors looking at that actual GAAP EPS number, in my perspective. But I do want to look, obviously, we'll look at these slides and see what else we can look at. There is a elephant here, and that's a human, and then there's a bear that's about to maul him. He's got a very long neck. But I don't know what these animals are doing here, but I kind of like them. Whoever they hired to do this, good job. So they deliver durable growth at scale. Salesforce is the #1 CRM software provider based on total software revenue worldwide in 2018. How about 2019? CRM is the fastest growing segment in enterprise application software. Projected annualized growth rate of 12% from 2019 to 2023. Very good for them. Consistently delivering durable revenue growth, more than doubling from $8.4 billion in 2017 to 2020. Good for them. What was that? Driving towards a long-term revenue goal of $34 billion to $35 billion by 2024. That's crazy. That's very good for them. They're uniquely positioned to help customers drive broad-based digital transformation. I mean, just off this consensus, I like what this company's doing. I really do. And you see aggressive goals like that, and it makes you feel good. I really want to see, I don't know, I got to look, obviously, take a look at these fundamentals. And I want to see if this company's worth taking a look at for buying, you know what I mean? So let's take a look at these results. Fourth quarter revenue up 35% year over year, 34% in constant currency. For the fiscal year, up 29% year over year. Good for them. Hear me out. You ever talk to people about finances, or you're trying to, and then they say something like physical year instead of fiscal year, and it just makes you really upset. Just makes you want to just hurt someone. Fourth quarter operating cash flow up 23% year over year. Current remaining performance obligations of $15 billion, up 26% year over year. Remaining performance obligation of $30.8 billion, up 20% year over year. We saw this guidance as well. From a GAAP EPS standpoint, they are guiding profitability, though. I love that. I love that. Speaking of that profitability, if they're doing profitability, let's take a look at. See that? I don't know if you've ever seen anyone type with Guam higher than that. My gross words a minute is out of control. You just got to take a look. Obviously here at the PE ratio, forward PE of 45, and obviously this is off a GAAP standpoint, so it's hard to make a good judgment here. This is a concerning number, but if you're looking off this valuation, is it worth it? Do you think this company is worth that value? It's really debatable, but I think you could have an argument for yes, just due to the fact that they are growing revenue so rapidly. But then again, Facebook's growing revenue just as rapidly, but they only deserve a 24 P ratio, I guess. So, sorry. Just saying. I just want people better start buying Facebook, buddy. Anyways, let's get back to Salesforce. As we take a look and see that finally we're having a green day so far. I love to look at that. So from a non-GAAP standpoint, you see here this obviously difference here, but overall nothing crazy. But a decrease of 161% in terms of actual loss per share when you're looking at a GAAP perspective is not good. You don't like to see that. Operating margin was negative 0.7. That's rough. And just their normal non-GAAP operating margin went down as well. So that is a concern for sure. And you see operating margin looks like it's on a downward trend, but you don't like to see that. But you do see quarterly revenue on a big upward trend for sure. Quarterly subscription from the Sales Cloud you see growth. That's right, 70% growth. Service Cloud, 26% growth. Salesforce Platform, 74% growth. Marketing Cloud and Commerce Cloud, up 28%. That's huge, huge stuff, guys. What can I say? Revenue by region, the Americas, up 32% year over year. Europe, Middle East, that's lovely. They went ahead and 49% year over year. Asia Pacific, up 28% year over year. So they're growing in every freaking segment. Every segment. Everywhere around the world they're growing. Obligations obviously growing as well. Love it, love it, love it. Operating cash flow, you can see it's something that they actually tend to struggle with typically. If you look historically, looks like Q2 and Q3 are always pretty rough for them, no doubt about it. But then you should expect a pretty good Q1 of 2021 is what it looks like, because historically they have a good Q1 in terms of free cash flow. So that'll be a good thing to look at for next quarter. Cash and cash equivalents. They've grown cash and cash equivalents quite a lot, as you see, despite a weakened cash flow. That's a very good number right there. Financial summary. You know what we like to do. We like to... Ooh, Black Friday and Cyber Monday momentum. Ooh, that's cool stuff. So that's like, you like to see that stuff. We like to see what they did in Cyber Week. So continuous improvement sustains growth and long-term value. Love it. Business overview. We love to see that. Salesforce Customer 360. What? Trusted, smart, flexible. Oh my gosh. You love this. You just love this platform here. You just love this platform. They're a global leader in CRM, obviously by quite a bit. Oracle and SAP can eat booty, apparently. Good for them. Innovation drives growth. You are right. From a sales, service, marketing, e-commerce, communities, collaboration, platform, integration, and industries perspective. Look at all of this going on here. Oh look, it's the Lionstein. That's why they have him in the thing. I don't know what that's supposed to do. They have a large and growing addressable markets, no doubt about it. Obviously from all the different segments that they refer to there, integration, commerce, analytics, stuff like that. All of it, you see growth and all of it, which you like to see. They're the leader in innovation, says the Fast Company. It's best workplaces for innovators. The Fortune 500, Future 50 Top 10 company. Okay. 100 fastest growing companies. LinkedIn 2019 top companies. They're the leader in philanthropy. Number one company that cares. They're the number one company that cares. Can you believe it? They changed the world. That's what Fortune says. Top 75 corporate philanthropists. They're a leader in culture. They're the world's best workplace. I want to work here, apparently. Best companies to work for, and top companies to work for from Indeed as well. I want to work here, clearly. So, one-to-one-to-one model. Obviously, they've given out 4.8 million community hours, $3 million in grants, 46K non-profits. Good for them. So they're really doing what they can to assist around as well, not just necessarily focus on their cashish. And you see a huge headcount growth. Wow, look at this headcount growth. Can you hire me? All right, buddies. I guarantee I'll fit in well. They're strategic technology partners with Microsoft, Apple, Amazon Web Services, IBM, Salesforce. Well, excuse me. That's them. Google, Alibaba, Dell, Cisco, and Hewlett-Packard Enterprise. So really, who else do you want to be with? This is just a genius company. Partner with some genius people. Ow! That hurts. Ecosystem advantage, obviously 30% partner certified individuals. They're industry focused partners, around 100 of them. Just really, really cool stuff. So they're really focused on just everything. Pretty exciting. Oh, thank you. Blaze your trail. Blaze it, baby. Woohoo! This is overall like, I don't know. I hate to say it. This is a really well made slide show. I'm just telling you right now. Really, really well made slides. Yeah, that's really all we got to talk about here as far as that's concerned. So I'm excited. I think this company is doing a lot of good things. Um, they're doing a lot of good things, and I think it is worth taking a look at this company, regardless of valuation. Right now, if I see some more droppage in this company, I'm going to consider it. Um, I really like what they're doing. I really do. I really do. That's all I got to say about it, though.